In this presentation, we will continue on with our partnership comprehensive problem, this time taking a look at a Schedule K adjustment related to dividend income. Here we are on our 1065. We're going to be focusing down here on page 4. So we're going to be in page 4. We're going to be having an adjustment for the Schedule K. Before we do that, we're going to check that we are indeed in balance. So everything is in balance. Looks good going forward. We're then going to go to the page 4 and consider an adjustment related to the dividend income. So the dividend income is going to be down here. We reported it at the 750. So 750, it's going to be a Schedule K adjustment. We had put it first off in the income section. So if I go to the income, we put it here in the income, noting that we're probably going to have to make an adjustment for it. So it's sitting right there. We're basically going to be doing an adjustment, a journal entry, putting it into the K1 and then removing it from this area. As we do so, we should then remain in balance. Let's take a look and see if that is indeed the case. So I'm going to go then to number 4, page 4, and then I'm looking for dividend income. So we're looking for the dividends. That's going to be here. So dividends, I'm going to jump to that data input. We want the ordinary dividends, and that's going to be for the amount of 750. 750. Now, what about the qualified dividends? How much of those are going to be qualified? For that, I'm going to go to our notes. We're going to need to go to the notes to get more information on the dividend income. And we're going to say the qualified dividends are 650. So I'm going to go back over and I'm going to say of the 750, we got 650 qualified. Now, that's not showing up. Notice if I go back over and look at our dividend income reported on the income statement, we only see the 750. So what that means is of the 750, 650 of that 750 is qualified. All right, so then I'm going to go back over and that's what we have. If I go back up to the forms without adjusting it on the income statement, then we see it's here. We see it there on the Schedule K. And then if we go to page 5, we go to the Schedule L. We'll see if we're in balance. We're now out of balance because we didn't record the other side of it. And then we see our information in terms of our income information in terms of the M1 down below. So we're out of balance. Now let's record the other side of it. So I'm going to go back to the detail. I'm going to go back to the income information. And we're going to scroll down. I want to say this is going to be an M1. And again, I'm going to put it down below because I'm going to basically show the adjustment, basically the journal entry that's happening here. So I'm going to put a negative 750. So negative 750 down below, say OK. And let's see if that puts us back in balance. That should be the two sides that we have. So that puts us back in balance here. Let's see if we can then reflect that same thing in a more transparent way on our Excel sheet. Here we are in Excel. We're going to be concentrating in on the dividend income, and the other side is going to be going down here to the dividend income for the Schedule K. That's going to be our transaction. Going to go back up top. And before we do that, I'm going to put a note right here. I didn't put a note here last time and say that we're going to say this is a note, and this is say to record sale of equipment on a tax basis. All right, now we're on the next journal entry. I'm going to say that this is going to be a debit to the dividend income, basically removing that income because we're going to be decreasing it. We're going to put it down below so that it will not be included for the tax calculation of the net income in the Schedule K section. So that's going to be for 750. Let's see what this looks like. That'll be the debit and the credit. We're going to post this out. So we're going to go down to cell Q34 and say equals, scroll on up to that 750 and then enter. That'll bring it down to 0. Other side then going to the dividend income Schedule K. We're in Q41. Within Q41, we're going to say equals, scroll back up. We're going to pick up the credit of the 750 and enter. So there we have it. If we scroll back down, there's no adjustment then to our book balance. And then on our tax balance, we're not picking up for the income those last items with the Schedule K and the M1. Therefore, our amount here is going to be the 287,100. Let's see if we can tie this information to the tax return. Back to page 1 on the tax return. If we scroll back down, we're at this bottom line number, which is basically the tax number. We have the 287,100. 287,100 is calculated here on the tax side of things, not including the Schedule K and M1 information. We're going to go back to our data. If we go to page 4, then we see that 287,100 and the 750. And if we were to add those two up, we would then get to the 287,850. So in other words, if we took those two numbers and added them up on the Schedule K adjustment there, we get 287,100 plus 750. That's going to be the 287,850. If we then go down to page 5, we can see that we are in balance. Scrolling down, here's our book balance number, the 355,278. So that is going to be here. We have the book balance of the 355,278. And then we have the other side at the 287,850, and that could be calculated a couple different ways. So this is if we start at that basically the 287,100, and then we take that Schedule K adjustment we had here, then we can have kind of a two-step process, right? Here's the book balance taking us to the first page balance, 287,100. Then we have that Schedule K adjustment that brings us to the 287,850. If we want to mirror exactly what it shows here to make us feel good that we're tying out exactly what's happening here, it's a little bit more complicated. You'll recall that these two, because of that sale that happened, net out to that gain amount. So if we want to think about these two items, this amount here is the gain on the disposal, and this is related to the gain on the disposal. Those two numbers, if we had to do a worksheet on that, we're going to say here's going to be the beginning number, our book balance. Here's the book value of the equipment that is sold. I'm basically taking that from our journal entry up here, the book value, the 60,000 minus the 20,714 for a book value. And then we had the gain on the sale, which is recorded down here on the tax basis, which was the 55,685. The difference between those two is that 16,399. That 16,399 that we see up here. And then we have the difference in the book and the tax depreciation. The difference in the book and tax depreciation we have reported here. So there's that difference. And that's the way you can basically tie in exactly in this scenario. If we wanted to see exactly, instead of taking that two-step, this number, how to get to that number, this number, and this number, and then we can basically double check it. So two ways we can get there at this point. We've got the beginning balance, then we've got the balance that would be the on the first page. Then we got those Schedule Ks, which would take you there. Two-step method, or if you want to see exactly each line item on the M1, you'd have to get into a bit more detail and take a look and verify each line item on the Excel worksheet, which would look like this.